Good day everyone, my name is Bettina Roque and my report is about index number trend analysis. So first, for my learning objectives, first is to know what is the index number trend analysis. Second is to know what is the use of index number trend analysis. And the third is to know how to evaluate income statement and the balance sheet of a company using index number trend analysis. First, what is the index number trend analysis? Based on my research, it is a type of analysis of percentage financial statements where all balance sheet or income statement figures for a base year equal 100% and subsequent financial statement items expressed as percentage of their values in the base year. It is also a useful tool for long-term comparisons. It is a method recommended when a comparison of financial statements covering more than 2 years is involved. And for the formula, the formula of the index number trend analysis is current year ratio over the base year ratio. And for my chosen company, I chose the Globe Telecom Incorporation and subsidiaries. Now, let's analyze the liquidity of Globe Telecom using index trend analysis. First, I get the current ratio and the quick ratio of the company from 2008 to 2012. I use the formula, the current year over the base year, to compare the liquidity of the company from 2008 to 2012. So, this is the current ratio of the current year. I divided it to the current ratio of the base year, which is 0.5828, and I get these answers. And as you can see, it is increasing. And for the quick ratio of the Globe Telecom, and again I use the formula, and the quick ratio of current year, I divide it to the quick ratio of the base year, which is the 2008, and I get these answers, which is increasing. And to have a clearer view of the liquidity ratios for the past 5 years, I made a graph. So this graph shows that the liquidity ratios are increasing and therefore are deemed favorable, because this means that the company sufficiently meet its short-term obligations. And for the solvency ratio, for the company again, we use the formula, the current year over the base year. Debt ratio of current year, I divide it to the debt ratio of the base year, which is 2008. Again, these are the answers. These are the answers that I get from this. And it is increasing. While in the debt to equity ratio of the Globe Telecom, this is the debt to equity ratio of current year. I divide it to the debt to equity ratio of the base year. So, to have a clearer view of the solvency of the company, this graph shows that the debt ratio of the Globe Telecom is increasing, that reached 1.2 in 2012, which is still favorable as compared to debt to equity ratio drastically increasing over time, which is unfavorable because the company is very much inclined to debt financing instead of equity. And in terms of profitability, we get the ROA and the return on assets and the return on equity. So for the return of assets, I use again the current year over the base year. The ROA of current year, I divide it into the ROA of base year, which is 2008. And and for the 2008 to the base year, we get 1, and it's decreasing. And for the ROE of the current year, I divide it to the ROE of the base year 2008, and these are the answers. And for this graph, the return of assets of the company has declined, which is unfavorable, and it indicates that the company is not effective to earn a return on its investment in assets. The ROE has also decreased, which is also unfavorable, because it means the company is not efficient in using the money from its shareholders to generate profits. And for my conclusion, first is the index number trend analysis is really important for the company's monetary statements for the investment purposes. Second is financial analysis. Analysts and managers use these financial statements to analyze the company's activities over the period. And last, this is useful in framing suitable policies. They reveal trends and tendencies, and index numbers are very useful in deflating. So that's all for my report. Thank you.